I'm Wilhelmina Dork, and over the years I've hosted such documentaries as The Ancient Pyramids of Vancouver and The Most Beautiful Beaches in Nebraska. Today, we'll uncover the foundations of one of the most fascinating and important topics ever, financial accounting. So hold on to your assets as I explore the vast body of concepts in the world of debits and credits. This is Dork on Accounting. I'm holding a set of financial statements. Wait, this is an Olive Garden menu. Well, had it been a set of financial statements, we would have seen that there are many elements here that have been placed in a very specific format. The mystery behind that format is what we hope to unveil today. I'm here at the village of San Sepolcro in Italy. Why have I come here? It's because the hotels were all booked up in Florence. However, this worked out in our favor because this is the birthplace of the man credited with inventing accounting. Since I was stuck here until the bus arrived, I decided to learn more about this man from one of the locals. So I understand you're a monk.
Actually, I'm a friar.
Oh, I thought I smelled grease. I understand that Pacioli was the father of accounting, so his son's name was Accounting, and we named the profession after his son.
No, he didn't have a son. Accounting is the profession.
If he never had a son, then how was he a father?
I can tell you he invented the two basic groups of elements for financial statements. The first are those which describe resources or claims to resources at a specified date.
Sort of like the bill collector who's been hounding me since I refused to pay my cable bill.
The other group would be those which describe the effects of transactions and other events and circumstances that affect an entity during a specified time interval.
I've heard it's called double entry bookkeeping.
That's right.
I suppose that's because the monastery has 2 doors. I learned that there are 10 elements of financial statements. To learn more, I spoke with a professional known as a CPA. So you're a CPA?
That's right.
That's an acronym for can't party anymore.
No, actually it's Certified Public Accountant.
Oh, I assumed it's because you have no personality. Anyway, tell me about these elements.
The first 3 make up the balance sheet: assets, liabilities, and equity. Equity is also known as net assets.
Like a fisherman.
What?
A fisherman uses nets to catch fish, so they would be his net assets.
Well, I suppose so. Next we have contributions from and distributions to the owners.
And the next?
The next is called comprehensive income and is actually made up of the final 4.
Was that done to save time?
No, it had to do with proper presentation.
No, I think they were just being lazy. I did notice DR and CR in the financial records. What are those?
Those stand for debits and credits.
That has to be a mistake. CR makes sense, but a debit should have been DE.
Well, you see, DR comes from debtor.
No, I think you need to do a little more research. After all these years, they felt it would be too difficult to change the initials to DE. I wanted to learn more about the concept of presentation, so I met with a typical user of financial statements, a commercial lender. Can you explain the concept of presentation?
Certainly. Presentation refers to the display in financial statements of line items, totals, and subtotals.
So it's just a bunch of words and numbers.
It's more than that. The line items are depictions in words and numbers of elements of financial statements.
It sounds boring. Can we edit this part out? I don't think the viewers are going to care.
For a user, such as myself, the financial statements are a principal means of communicating financial information to those outside an entity.
Oh, now I understand. Do they use emojis?
What?
Emojis, you know, the cute little pictures.
No, not that I've ever seen.
I use emojis in all my communications. They help me convey what I'm thinking. They should consider using them, don't you think?
Well, I suppose.
Of course, it wouldn't be appropriate to use the naughty ones. I learned that the objective of financial reporting is to provide financial information about the reporting entity. The goal is to provide useful information to existing and potential investors, lenders, and other creditors in making decisions about providing resources to the entity. Anyone else is just simply out of luck, I guess. What would I expect to find in a complete set of financial statements?
There are 4 primary groupings in a full set of financial statements. The first is assets, liabilities, and equity. The next is revenues, expenses, gains, and losses. These are summarized in comprehensive income. Next is cash flows.
Didn't we cover that in the last grouping?
No, comprehensive income can be very different from cash flows.
Don't you think you should fix that?
What?
If I were writing the rules, I don't think I'd ignore an obvious problem like that.
Well, finally, we have the investments by and distributions to owners, and these all work together to tell a proper story.
Not one I would read. I don't think it would make it onto the New York Times bestseller list. Having a good grasp on the elements and line items for presentation, the next step is to determine what to recognize. I wanted to consult an expert in Rome, but the producer said there wasn't enough money in the production budget, so I settled for another talk with the French friar. So tell me about recognition.
Recognition is the process of incorporating an item in financial statements.
No, it's not.
What?
No, recognition is when you know who someone is by their appearance. That's why online profiles have pictures.
I'm afraid we're not talking about the same thing.
I can send you a YouTube video that can explain it. Before I left the deep fryer, he introduced me to an interesting concept that needed further investigation: de-recognition. So I understand that accountants often have issues with amnesia.
How do you mean?
Well, I've been told you often de-recognize things.
I'm not sure you fully understand the concept.
Well, I'm not the one with dementia now, am I?
De-recognition is the process of removing an item from financial statements. De-recognition should occur when an item no longer meets any one of the recognition criteria. You wouldn't want it to stay there forever, now would you?
So it's not like the internet. My coworker posted a photo of me at an office party last Christmas, and it just keeps popping up randomly.
You don't say.
No, really, I can't seem to make it go away. In addition to recognition, another important concept is measurement. There are 2 primary systems of measurement which may be used: the metric and the imperial. Oh, it seems they should be entry and exit prices. I don't know what that means. So why do you have 2 types of systems of measurement?
Because both could provide a faithful and relevant representation.
I see. It would depend on which way you're going, and you could just follow the signs.
What?
Whether you're going in or out, you'd simply look for the signs for entry and exit.
No. An entry price is the price paid, while an exit price is the price to receive. You'll want to choose the best method under the circumstances.
So measurement is not part of a double entry system.
Well, yes, it's still part of the basic double entry bookkeeping model.
But that's not possible because now you clearly have an entry and an exit, not two entries. I can draw you a diagram if it would help. The final and perhaps the most important element of financial statements is disclosures.
Information is depicted not only by numbers, but by words on the face of the statements. In addition, information should be provided in the disclosures.
Isn't that a lot of unnecessary work?
Not at all. The primary purpose of the notes is to supplement the information on the face of the financial statements.
Who has time to read anymore?
Well, users of financial statements.
Oh, that wasn't a question. It was just something I read on X, formerly known as Twitter.
In any case, there are 3 categories of items which should be disclosed: information about the entity, information about line items, and information about events which could affect cash flows.
Whatever.
Lastly, you would also have to consider any potential adverse consequences of including certain information.
I learned that lesson the hard way on dating apps. You don't want them to know all your faults before you even get started, now do you? I've covered all the major aspects of financial statements, and I'm more confused than when I started. What started out as a fairly simple concept created over 500 years ago by a Franciscan friar has over time been completely mucked up. The truth is, we may never fully understand the story these financial statements have to tell. Wait, this is the Olive Garden menu again. Well, until next time, I'm Dork on Accounting.